Good evening. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Thursday, the 4th of March, 2020, about 6:15 p.m. Central Time. Well, today, you walk into two events, and lo and behold, the first event was Fed Chair Powell speaking before the Wall Street Journal conference. And I watched the whole thing from beginning to end. It wasn't even on financial TV, any of the stations I saw. You had to go to the internet to see it. Why it didn't get more coverage was beyond me, but what can I tell you? To make a long story short, he disappointed the market. Leave it at that. Then we had OPEC. OPEC came out. The market was expecting some form of reasonable amount of increase of oil. Anywhere between, the consensus was a minimum 500,000 barrels to up to 1.5 million barrels. And then we started hearing yesterday the first rumors among some ministers, maybe there won't be any production cuts. I brushed that off, to be honest with you, and said, I don't know. But I have a policy that I teach in my charting course, and I follow in my writings. And I don't go through what I consider major reports if I don't have to. I considered this OPEC event fairly important because the game was, are they going to put more oil out? And with Fed Chair Powell, I did consider this and do consider this an important report because it had to be the first time he was questioned about what's going on in interest rates when we saw the 10-year notes spike up to 1.6 and the market wanted some assurances. He offered nothing. Tomorrow we're going to get the jobs data. Will it matter? I don't know. But what I do know is that the market's focused on the fact, and it's been doing it, that we're in that transition. We're in post-COVID. Post-COVID means higher inflation, higher interest rates. You don't have to believe me, that's it. Does it mean runaway on both? Absolutely not. Will the market overshoot how high interest rates should go? Absolutely. The first time out of the gate, they get too high, then they start pulling back to a bit more reality. You're in that shooting area right now. As for what OPEC wants to do, well, OPEC wants to protect price. That's pretty evident, and it took the Saudis to do it. I mean, they're the swing producer. They're the producer that voluntarily, not part of an agreement, they're holding their own 1 million barrels off the market. Not part of an OPEC deal. They want to keep the market strong, and they want to do that until April. So they want to be sure that the COVID vaccines are out there and they're going to do what the market thinks, and they want that surety. Okay, they're going to bring American production back on too. You do know that. I mean, when you're up here, if you look at Brent, $67 a barrel, and we're 64, I don't know of many producers that can't go out there and do some hedging and get their oil and make some money. So that oil that's the low-picking fruit, the easy stuff to bring out on the market, that should be brought back out on the market. We'll see if that happens. Interest rates, well, the Fed's not there to defend the market on the longer end. That's basically what they did. Can they shock the market and make a reaction because the Fed, he didn't misspeak, he just didn't say anything. He just said he's got his tools. I didn't know what that meant. That could happen. Did it impact other markets as they came down? It certainly did. So let's go, if we could, to the S&P. What are we doing? We're pulling back to major support. 37.33, we've talked about it. It's the 18-week average of closes. You're 16 points away. I think and I hope the market decides to make a run and challenge it. We haven't done that since last November. There's nothing wrong with doing that, and that's your first washout. Unfortunately, for all these new Robinhood traders and other types that have come to the market, they're going to have a little bit of pain because they've not seen a correction of this magnitude. If it gets real nasty, and I mean nasty approaching 15-20% correction, they'll lose a lot of money. I don't think they've seen it, and they don't have the experience that many of us that have been through this do. We get looked at as foolish. Why? Because we've got gray hair, we've been through it. When you don't have that, you're just brazen. I can go out there, you guys are all wrong, I'm just going to keep buying, this thing's coming back. If you're paying cash for it and you don't need the money, it's okay. If you're margined, you got a big problem. You can see how the index has been falling down. You see that the trend is down. Lower highs, lower lows still falling. The next support zone and moving averages is the 100. Resistance is right through here. The trend is down. The bias is down. Bollinger Band, you got through today, and this would be today, right here. So are you going to stay under it for any length of time? I seriously doubt it. I would expect between the Bollinger Band and the 100-day average, within 70 points, for the market to find its footing. That does not mean I'm saying buy. The market's still in a bearish phase. This is the washout. Momentum-wise, you're oversold. That's what's giving me the courage to say that instead of the market having locked into a bear phase, you're going to get oversold in this on your way down. In the NASDAQ, it's the same thing. If you take a look at it, you came down, you've had the pattern of lower highs, lower lows, and oversold. There's been nothing bullish on the chart, but I didn't think the Fed was going to do what it did, and I know that I'd have reasons going into today to tell traders, hey, it's time to cover shorts. Between here and the 100-day average, I think you've about had it. We'll see if I'm right or wrong on that. I don't know. In the Dow, this market's stuck in these Bollinger Bands. Doesn't really want to come out of it very much. So it's the one that turned itself. It's had no trend. It's had lower highs, lower lows, but did it coming in. Take a look at this. It just did it again on the close of business on Wednesday. And the key was, and I want to come here and point this out, here's the high of 31,637. You come down, this high 31,609 with an outside day down. If the market's going to fall from here, which I would assume there's a good shot it would, your stop has to be over this high. You're looking for the market to have resistance at the 18-week, and maybe you're going to get down to the Bollinger Band. I was surprised that it did it. In the Russell, same thing. Been looking for the downtrend. It was all in place before today. Take a look at this. Is that not a downtrend? If you don't agree, there's a problem. Lower highs, lower lows under the 18-day average, not oversold, right? So if it drops, I'm not saying it will, that would be the number 88.54. 50, we'll round it to it. So you got under it. Okay, but you're also oversold as can be. So what I'm saying in a nutshell, the trends are down. They're oversold. None are embedding. You had a big event. You're getting a Friday. You might see some short covering. If they get better job data, that could be good. If they get bearish data, the market's already broken down. I don't know if it'll feed on that or not. I'm getting mentally into the spot where I heard it today. 2 million shots a day of vaccine. That's important. VIX, did we not say yesterday right here, and I wasn't doing a market prediction, likely to go to the upper Bollinger Band. I know I said that. I'm surprised it did it, but that made sense. Higher lows, higher highs, you're at a resistance point. So now in the 20-year bond, but this is actually the 30-year bond. I don't know why I got 20. It's the 30-year bond. My typing is terrible. Lower highs, lower lows coming down. Boy, I had an eye operation. I can read better than that. Still bearish in the 10-year. Can it go to the Bollinger Band? Yeah. Are we oversold? Yeah. You'd have to take out 133.23 to cause that market a bit of fear about anything going on. And going back to my 30-year bond, I got that wrong. You'd have to get over 161.2. There's a lot of resistance here at 161.6. What have you done? You've seen the end of that 0.5, 0.6. We talked about this on 10 years. That's going to be in history books. Do I think we're running away to 3%, 2.5%, 2? Being to 2% will be not as easy as you think. That's my opinion. You've got the Fed's attention. They're seeing what has to be done. They have tools. They won't let it get out of control, but what they have to do and what they could do are very different. They don't want to send the wrong messages. They know the market's anticipating post-COVID. It's coming into these rates. They've got to let it work its way through that. In addition, we haven't had a stock market break in a while. What's so wrong with that? As long as it's not a bear market, nothing wrong with corrections, which are 10% from the recent highs. You got it in the NASDAQ. In the dollar index, you're in a big resistance area. Wants to run, fine. But is the market had a trend? No. Have I not been telling you that? A lower low, higher high. How long have I been saying these currencies are a son of a gun? In my newsletter, which I'm offering free right after this to you, along with my morning subscriber videos, I have been saying that my favorite commodity to trade, the favorite complex of mine is currencies. I find that they're the most honest of everything, but they haven't been trending, with the exception of the yen and the Swiss franc. They have been in big downtrends. Everything else has been in a whipsaw, and that's been continuing. Same in the euro. Today they enter a downtrend. So I should be getting bearish from the 122.25 area down at 119.60. Is the time for me to start getting bearish? I don't think so. I think that the market's also now down to the Bollinger Band. I think it's exhausting itself in momentum, and I'm not bullish. I just think it's more of the same. In the British pound, intraday until Fed Powell was speaking, until he began just after Chicago time, 11 o'clock, this market had actually had a lower low, made the higher high. It was starting to act like it wanted to go up. The more he spoke, and I was listening to every word of it, I'm going, this is not good. And I'm watching the markets, and I'm just going, wow, I feel good. I tell people you don't go through these reports. This is the futures market, not the stock market. Stock market, you get in, people hold for investments. Not a lot they can do. They'll ride it out. Futures with 90% leverage, why? Why ride it? Bitcoin, churning. I've told you, I think that the Bollinger Bands are going to narrow in here. That's still what I think they're going to do. In Brent versus May crude, the market's staying strong. Obviously, who's leading the way is OPEC. And once you got over this number, you stayed there. It really, with the end of the March contracts, you started shifting your gears and got over this average, and you've stayed there. OPEC's taking control of that differential. Now you went up to the upper Bollinger Band. If you were sitting next to me today, the market's overbought for the first time hitting a Bollinger Band. Do you think I'd be giving you an elbow and going, don't you think you should take some of your position off if you were in it on the upside? What do you think I'd be doing here on this one? Same thing. I'm being funny, but I'm not being funny. That's what I teach. First time you hit it, bye-bye. Thank you. Couldn't be nicer to me. Again, this is futures trading. This is not investing. This is futures trading. I believe that's what the business I'm in. Not day trading, futures trading. Very big difference. Gasoline didn't quite get up to the number. I think it will. I think that you're headed possibly up there. I wouldn't want to see today's low taken out. It would make me rethink everything. But until then, higher lows, higher highs, embedded reading, the potential there for hitting the upper Bollinger Band. Okay, and great weather coming. We're going to be in the 60s in Chicago next week. I just heard that we always snow in March. I think there's 2 years since they've been keeping records that we don't get snow. So we'll see. We're going into the high 60s. It'll be interesting. Natural gas back down to these lows. This is an area of support. The market has peaked out from the wintertime cold. We talked about that. The pros, I think, went short here with stops over there. Big number, way too much risk for the average trader. So you put it together, you try to come up with a game plan. I'm not surprised to see all this red early on and in the morning, but then we'll see if the market's able to do some short covering with that. Is it a time to keep your wits about you? Absolutely. And with that, I'm going to offer you my complete research if you'd like to try it. 2-week trial. All you need to do is go to the website, sign up for it. We'll get everything in your hand. Access to my twice daily written updates, my morning subscriber video. By the way, if you want to get the Spider ETF video with this, just mark it down. We will give you that too. What do you have to lose? If you think you don't need the info we're writing about, my thoughts on this, that's great. If you do, grab it. This is your opportunity. Remember, if you like this on YouTube, please hit that free subscribe button. And if you have comments for me, write. You'll see I do write back and I make them public. I'm Ira Epstein. You have a good day. Take care now.